Unicorn model is a strong ICT PD array forms after the ICT market structure shift. If you don't know about the market structure shift, you can scroll into my channel and find the market structure shift video. It is strong because it forms after a structure shift. Secondly, it is a combination of two PD arrays like a breaker block and a fair value gap. So two PD arrays overlap to form the unicorn model. That's why it's a strong PD array. Here we have a drawing of bearish unicorn model. This is a bearish unicorn model where price forms a bullish fair value gap, bullish order block. Here you can see, and price sweeps previous high. Then price breaks this order block to the downside. When this bullish order block is broken to the downside after a sweep of previous high, this becomes a breaker block. For breaker block, it's necessary that price sweeps the previous high or breaks the previous high, then break below the bullish order block. Then it becomes a bearish breaker block, a breaker block of the sell side. After this, when this breaker block has been formed, what you need to look into the price for a fair value gap opposite to this breaker block. We have this breaker block confirmed, then we will look for the fair value gap. We have a bearish fair value gap here. No, we have two PD arrays for the sell side, for the bearish side. We need to find the overlapping area between them, the common area where both these PD arrays meet or overlap. So here this is the total area of fair value gap and this is the total area of breaker block. Now this is the common area between fair value gap and breaker block. I mean the breaker block is completely overlapped by the bearish fair value gap. That is why this area will be called as a unicorn model. It's a bearish unicorn model. I mean the unicorn model for the sell side. Now let's just study the bullish unicorn model. Is same like the bearish unicorn model, but it's opposite of that. So what we need to look for? We need to look for a bullish breaker block. How does a bullish breaker block forms? Bullish breaker block is basically a bearish order block that sweeps or breaks the previous low. Then it is broken by the bullish move to the upside. When a bearish order block that has swept previous low or broken the previous low is broken by price to the upside, is not respected by the price, it becomes a breaker block. So we have a breaker block. What we need to look for next? We need to look for a fair value gap overlapping with this breaker block. So this is a breaker block, confirmed breaker block. We have this fair value gap to the buy side. So we need to find the common area between these two. The common area between these two is this, where these two PD areas are overlapping. This common area is called the unicorn model. It's a bullish unicorn model, which means it will act as a support for the price and it will uh, support the price to the upside. So this is how a unicorn model looks. Let's just see the examples in the real market. This is the real market chart. You can see a bullish order block forming at this point, then previous low broken, then a structure shift to the upside. When the structure has been shifted to the upside, what we need to see? We need to look for the breaker block. This is a breaker block now because it has been broken to the upside, and opposite to it we have a bullish fair value gap here. The area where these two are overlapping is this area indicated by the green rectangle. Here these two are overlapping. You can see price just tested the breaker block and price went up. You can see price just went up to the upside. So you see a perfect trade was given by the unicorn model. Let's find another example of the unicorn model. Yes, here we have another example of the unicorn model. You can see an bullish order block, a bullish order block. Previous high has been broken. Structure shift to the downside. Bullish order block converted into the bearish breaker block. Then we have a fair value gap here. This is the overlapping area of these two, and price just tested this area and went downside. Then another example we can look for the unicorn model. Another example is here. We can see a bullish order block after which the previous high has been swept. The bullish order block previous high has been broken or swept. Okay, Then the structure shift to the downside. This order block becomes the breaker block now. This breaker block overlaps with this fair value gap at this point. You can see this is the overlapping area. That's why it will be called as the unicorn model, and price just tested the unicorn model, and you can see the sell off from this area. This is how you will trade the unicorn model. Many people ask where we will place the stop loss. You can place stop loss above the fair value gap candle, above the breaker block high or previous swing high if your risk management allows you. Okay, I think this is all about the unicorn model, and I think you have got the idea how to trade the unicorn model. If you like the video, do comment, and if you have any question, do comments below. I will answer your question via video. Okay, I wish you good luck for your trading. Take care. Goodbye.